you can really filter out views that say the real estate market will rise because of these things. Hello, this is Kim Ki-hyun from Richgo. Today is November 28th, and the Bank of Korea has decided to cut the interest rate by 0.25%. They say this rate cut was one of the most difficult decisions they've had to make. As you can see, while exchange rate volatility has increased, inflation rates have shown some stability. So, with the slowdown in household debt growth continuing, they mentioned that the pressure for growth has increased, which is part of the background for the interest rate cut. So, among the Monetary Policy Committee members, 4 believe that the rate cut is appropriate, and 2 members believe that it would be better to just keep the interest rate as it is. But looking at this, why do those 2 members think it's better to just keep the interest rate instead of lowering it by 0.25%? They were concerned about the issue of exchange rate volatility. As you can see here, exchange rate volatility has recently increased, while inflation rates have shown stability. But if South Korea lowers the interest rate by 0.25%, the interest rate gap with the US will widen even more. So there's a high possibility that the exchange rate will rise. So because of these concerns, isn't the exchange rate volatility increasing? It seems that 2 of the 4 members opposed it. Before I go over the main points of today's Q&A with Governor Lee Chang-young regarding the interest rate cut, I want to address some people who are already getting excited, thinking that this will lead to a real estate boom. Right now, the fact that we are continuously cutting interest rates means that the situation is so serious that we have no choice to lower them. So right now is definitely not the time to invest in risky assets like real estate or stocks. So when is the time? When the interest rates continue to be lowered and the bottom of the interest rate cuts has arrived, that's when it's actually a good time to invest in real estate or stocks. So keep in mind that we are already in the cycle described by Andre Costolani as the winter cycle of the asset market, which means the asset market is in a very risky situation. You can definitely filter out views that say the real estate market will rise because of these things. Next, the Monetary Policy Committee asked whether maintaining the interest rate at 3.25% after 3 months would be appropriate. But now they've lowered the rate. So why did they do that? There have been significant changes since October. For instance, the US presidential election, where Trump was elected, and both the Senate and House are now leaning towards him. That's right, everything is now leaning towards Trump. So these things have gone beyond expectations, and now there's increasing policy uncertainty. Also, in the 3rd quarter, the increase in exports was significantly lower than expected. So we need to review that. So this isn't just a temporary factor. The competition in exports from rival countries is intensifying, and there are significant structural factors at play. Of course, in terms of export volume, it's still historically at a high level, but the increase in exports has weakened a lot more than we expected. And it's the reason for that. It's not just a temporary factor. The export competition from rival countries is intensifying significantly, and there are major structural factors at play. And these phenomena have been getting stronger since Trump became president. So they imposed tariffs on Mexico and Canada, which are directly linked to the US wages. So it seems that they have judged the situation to be very serious now. Next, the Bank of Korea is projecting the growth rate, and you would think they might set it a bit higher. But look, they forecasted it to be below 2%. For 2025, they expect it to be only 1.9%. And for the following year, 2026, it's even lower at 1.8%. So they are presenting a growth rate that is lower than the typical 2% we usually think of. They have made the forecast. Growth is below 2%. With the rate cut, how much will growth recover? Bank of Korea's model shows a 0.25% cut boosts growth by 0.07%. So they asked how much the economic growth rate is expected to recover next year with this interest rate cut. According to the macro model created by the Bank of Korea, if the interest rate is lowered by 25 basis points or 0.25%, the economic growth rate is expected to increase by about 0.07%. That's really minimal. It's really minimal. Just because it changes by 0.25%, does that mean the world will change overnight? The stock market will suddenly improve, loans will drastically decrease, and all problems will be solved. That's absolutely the case. The Bank of Korea is still projecting the economic growth rate to be below 2% for next year, and they expect it to be even worse in 2026. This is the first time we've seen consecutive interest rate cuts since the interest rate crisis. What is that? The situation is serious, which is why they are continuously lowering the interest rates. You absolutely need to filter out the misunderstanding that lower interest rates will improve the real estate market. This is a really important point. The situation is so bad that they are continuously lowering the rates due to the interest rate crisis. So I hope you keep that in mind. So even though exports are worse than expected, lowering the interest rates doesn't mean that the export issues will be resolved, right? That's correct. The interest rate cut isn't aimed at recovering exports, but it's about considering the positive effects it could have on the overall domestic economy. So that's what they said. And what impact do you expect the continuous interest rate cuts to have on the exchange rate? So, as I mentioned earlier, it's right for 4 of them to lower the rates. 2 said no, needs maintenance. But what was the reason these 2 people said we should maintain the rates? They were worried that the exchange rate might go up, and that's why they said that. So what does that mean? They said they've had a lot of internal discussions about it, but what extent? There are various things we can use. We can manage it. This, the content. So we have enough foreign exchange reserves to manage volatility, and there are various means we can use. So they've just mentioned that. Let's take a quick look at the foreign exchange reserves chart. Here's the chart of foreign exchange reserves. As you can see, what do you think? It peaked exactly in October 2021, has been on a downward trend ever since. And recently, it seemed to be going up a bit, but in October, it decreased again. But the Bank of Korea says that this level of foreign exchange reserves is about the same as it was around mid-2020. They believe reserves are sufficient. Discussions to expand reserves with the National Pension Service continue. Measures will mitigate volatility. We're collaborating with the National Pension Service to boost foreign reserves, manage volatility, and through cooperation with government policies, we will mobilize various tools to mitigate volatility. So we're discussing that. While the exchange rate may fluctuate to some extent, it seems manageable. Now, regarding this recent interest rate cut, we need to determine whether it should be seen as an insurance measure for businesses or if it's aimed at preventing an economic slowdown. Our governor mentioned the aspect of insurance, and the issue of economic slowdown is all interconnected. So they made this rate cut with both of these factors in mind. Next, what about the guidance for the next 3 months? Well, among the 6 members, 3 are in favor of keeping the rate steady, while the other 3 suggest lowering it to below 3%. The issue of economic slowdown is all interconnected. So they made this interest rate cut while keeping both of these factors in mind. Now, what about the guidance for the next 3 months? Among the 6 members, 3 are in favor of keeping the rate steady, while the other 3 suggest lowering it to below 3%. So it seems like it's still about a 50-50 split for the next 3 months. 3 members just lowering it to below 3%. So it's still about a 50-50 split in 3 months. 3 out of the 6 members just that we should keep the interest rate decision as it is. Another 3 members think we should lower the interest rates a bit more. Shouldn't we keep the possibility open like this? It seems like that's how you're looking at it. Next, there's talk about the exchange rate. It's the volatility of the exchange rate at a manageable level. For now, we have enough will and means to speed up. They mentioned that while it can go up, the speed is really important. So they have the will and means to adjust the speed. Then there was a question about whether this interest rate cut would encourage the increase in household debt. The response was that it's true that lowering interest rates raises expectations. So even before the actual rate cut, since May, the market had already anticipated a rate cut. While the policy rate hadn't dropped, market rates had already fallen significantly. This expectation has been reflected, and that's one of the reasons why household debt has surged. So, even before actually lowering the interest rates, the market had already anticipated a rate cut since May. While the policy rate didn't drop, market rates had already fallen significantly. This expectation has been reflected, and that's one of the reasons why household debt has surged. Fortunately, they kept the interest rate steady in August, and after that, they used the government's macroeconomic safety policies to curb the momentum. The second phase of DSR is being implemented, and there are these aspects. So, household debt was only about 5 trillion won in November, and it seems like there will be a downward trend in December as well. I don't think household debt will be a big problem. They mentioned that. So, after the Trump administration took office, what do you think will happen to US inflation and the Fed's interest rate policy next year? So, as we thought 6 months ago, US interest rates might not drop as quickly as we expected. Originally, we expected interest rates to keep falling, but looking at the current situation, it's not the case. So I'm closely watching the December FOMC decision. That's what we're talking about. So, if inflation in the US doesn't drop quickly, we need to see what positive effects that might have from the Bank of Korea's perspective. They also summarized it like this: and even if we lower the base rate, if the banks don't lower their virtual rates, doesn't that lose a lot of its significance? You've summarized it like this: and even if we lower the base rate, if the banks don't lower their virtual rate, doesn't that lose a lot of its significance? They mentioned that the effect of already lowering the interest rate by about 50 basis points has been somewhat reflected in the market. So, even at the beginning of this year, there was a lot of expectation that interest rates would drop and things would get really better. So it seems like this has already been somewhat priced in, and starting from early next year, there seems to be a possibility that virtual rates might go down. They mentioned this, but this will also depend on how the US economic situation, bond rates, and things like that move, as well as what they decide to do with the base rate. Korea's interest rate cuts are not a positive sign. The economy is struggling, and cutting rates to revive it shows the situation's severity. Keep this in mind when managing assets. Please keep this in mind, because the economy is not doing well. Please keep in mind that we're cutting interest rates to try to revive the economy, which shows just how bad the situation has been since the 2008 financial crisis. I think it would be good for you to consider this when managing your assets. And I hope you all use our Richgo app and Richgo PC a lot and make wise real estate decisions based on the data. Thank you.